Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we are back. You know, the last segment I always love because it's an open mic. We get to say hello to everybody, have a good time. You know, one of the things we haven't done a little shout out here really fast to is we have actually one of our co-hosts right now. We have Natasha Livingston in here, and she's with OneGuard. You know, we've been talking about buying a new home or buying a resale home. Let me tell you, there is no better home warranty to get than a OneGuard home warranty, by the way.
That's right, Chris. How much did I pay you for that? I forgot.
Well, you know, we're still negotiating. We're negotiating terms still.
but you're right. And as we were talking to Lee about insurance, a lot of times new buyers don't realize homeowners insurance and home warranty, they run hand in hand. The homeowner's insurance is going to cover the structure of the home. Any major damage. We're going to cover and warranty all the mechanical items within the home. So the homeowner's not going to cover that. So if you're interested in buying either new construction or resale, you want to always look at, once you get homeowners, looking into getting a warranty to cover those mechanical items as well, guys. So we have two great products. You know, we have a basic plan for $399. We have an upgraded for $499, and I won't go into the details. But we do have a great warranty, and we would love to have you if you have any questions. But make sure you do that after you get your homeowner's insurance, of course.
Well, the lender's going to insist on that.
Yes. That is correct. They're always going to insist upon that.
They're really funny about that sort of thing. So
yeah. You know, I had somebody ask me the other day. They said, now I got a question, and this is always a big question. Like, so I have an escrow account, but it has 3 months of reserves. So that means you're going to pay 3 months of insurance? And to clarify, no. What we're going to do is we're going to get 1 year paid in advance, and then we're going to collect 3 months of reserves to pay for next year's advance payment. Right. Mm-hmm. So, that's one thing that a lot of people don't realize is, you cannot close on a home if you don't have a paid insurance policy for a 12-month period.
And
very important.
That brings up a good point when you're talking about the good faith estimate and stuff like that. You're qualifying. Your ability to qualify is going to be impacted by what insurance costs are going to be.
Most definitely.
That is correct.
Definitely, because again, if you're down there looking in Galveston and you're often going to have some costs of wind and storm and flood and things like that going to be associated with that payment. It could be you could get real enamored with moving down there and all of a sudden realize you're not going to qualify.
Well, that's to the point that Lee brought up earlier. He does ask, give the agents the opportunity to contact him ahead of time, because if there is a policy that may be $4,000 or $5,000, if you know that going in, that may or may not be a deal breaker, and you're going to have those reserves, as Chris just mentioned. So that is a very critical part to the real estate transaction. I'm certain Nicole can attest to that as well.
Right, and when we have clients for the first time, maybe their first time home buyer, we give them options as long as it's works with the lender with their deductibles and stuff. We might give them a couple different options. Look, you can go with this deductible. Maybe it's a little bit higher, but it'll meet your ratios for closing. Yeah.
And I'm seeing some like 2% deductibles.
Yeah.
Is that pretty standard?
Yeah. I mean, occasionally I'll get a client that wants to go higher than that, but I'm not really comfortable with that, going with a 5%. That's just not what we offer unless they demand it, and they want that for closing. But
do you often get somebody requesting lower deductibles?
I mean, the normal deductible's 1%, and then in Harris County and coastal areas, it's 2% for wind and hail. That's pretty normal in the market now.
And the one thing, sometimes you get people who want to do like a 5% deductible you mentioned right there. A lot of times we won't allow it. From on a home perspective, it won't be allowed. So you can generally, depending upon what your loan to value is, or your time of length once you've been in the home in the future, can change those deductibles out. But if it's on a new home purchase, whether it be a resale or a new construction, you're not going to be allowed to do a 5% deductible.
Well, let me ask you, Chris, your underwriter allowing some of these policies I see that don't really do the new replacement costs?
Well, here's the one thing, right? Is what you have to do when it comes to insurance, and this is our requirements from an underwriting perspective. All mortgage companies require this. Number one, it's one of multiple factors. It has to at least cover the loan amount. However, there's also a way to get around that. Let's say, for example, you're buying in an area in which, let's say you're buying a $500,000 home, and the land is a $200,000 land cost to it. And let's say they're financing $400,000, right? Well, there is a way then to be able to reduce that coverage down, because guess what? The majority of the value is actually in the land. So you have to. There's different factors
And that's true
associated
inside
with
the
it,
loop
right?
a lot.
Exactly, and it happens inside the loop. So there's not, and Lee knows this. There's not a one size fits all.
Exactly.
You have to really, every case is
Case
on a
by
case
case.
by case basis. That is
Well,
correct.
I've seen people get involved with a policy. They got it because it was the cheapest, but didn't do replacement cost.
Cheap does not equate best, by
Right.
the way.
No, that's what I said.
The ladies
why
over here, no.
That's why it's so,
Nicole's like,
Exactly.
no.
that's why it's so important to make sure you understand what you're buying when you're
Right.
talking about insurance. and stuff
Right.
like
Because
that.
a simple coverage as a busted pipe might not be included on your policy, even though it's a homeowner's policy. If that's not endorsed on the policy, it's December, January, and you're like, why isn't this covered? Well, it's the policy you went with.
And that's
We do cover busted pipes, by the way.
You
Shameless
but,
plug.
But really
Yes.
fast though, and most people don't realize that if it's not an endorsed, one of the things that the insurance you used to have, and I used to explain this all the time, is you had your HOB and your HOA, et cetera, et cetera.
Yeah.
One was a broad, one was an acute, or one was basically more defined. And so describe that though when you say that is it. You have to have you have two different types of or multiple policies, but sometimes you have policies that actually describe in their coverage what it's going to cover, and if it doesn't, then you're sort of out of luck.
Right. So with an HOB policy, it's a pretty comprehensive policy.
Right.
You've got HOA policies. So when I meet with a client or I'm emailing or on the phone, there are coverage comparison forms that we can use to send to them to show, look, hey, here are all the coverages that are included.
Right.
Sometimes clients will go with a dwelling policy, which is not recommended because that's intended for rental properties.
Right.
But those policies are very limited.
Right.
And so it just depends on what the client's looking for, what's the best fit, maybe what the cost is involved. And so there are many different policy forms, but just, educate yourself to make sure you have the correct coverage. Don't overinsure yourself if you really don't need all this additional coverage, but just educate yourself.
That is awesome. Yeah. Nicole, you were sitting over there. You were dying to say something a while ago.
Yes, she was.
Yes. I don't know what it was, though. And, now you're looking at me like,
Deer
dang, you're doing
headlights
that right now. I have forgotten what I was going to
I'm
say.
like, wait a minute, I was just on Facebook right now. I don't know.
Hey, I will tell you, if you want to see all the great time we do have, by the way, in the studio, you can go out and look us up on Facebook. You can look up any one of us because we're all very active on Facebook, by the way. But you
Yes,
can also
they
go out to the
are.
Real Estate Rat Pack, and you can look us up there. And we have great photos, a lot of the events that we do, a lot of good time. We tell everybody this show is about educating and informing,
Yes.
but it's also about putting people together with other people. Because one of the things at the end of the day, real estate is about lifestyle and it's about relationships.
Yes.
And that's what that's one of the things we tell everybody is, we bring on experts on the show. We bring on individuals who are really good people, but also individuals that you would want to get to know in your life.
And real estate touches everything.
It does.
And everybody.
It really does.
It does.
Because they're,
Yep.
we stand on terra firma every day.
That is correct,
Right.
unless you get your knees shot out.
Private
Good one,
joke.
Chris.
I've got nothing.
I
got
nothing.
nothing.
I got nothing.
See, Joe, we miss you.
Wobble, wobble.
That's always really good. A little inside joke from the party.
Yes. Okay, now we can get back on track with our insurance here.
That is correct.
Yes.
That is correct. Back on track with insurance and and with Nicole as well.
Yes.
One of the things we're talking about. We have Nicole Vaughn in here, or Nicole Lopez. I always use your because
how
on
many
your
names?
Facebook says like multiple things right there.
Yeah.
Maiden
Maiden name and formerly married name.
Exactly. It's in parentheses, by the way.
Parentheses.
Yes, I wondered what that was.
So, but Nicole, one of the things, obviously, moving up to the Woodlands, let us know. One of the things I wanted to ask you is, now that the summertime is winding down,
Right.
What's your advice to people right now? Summertime is winding down, but there's still a lot of activity out there in the market. People still want to get into homes. People still want to move. How do you advise people right now? Because especially with school going back in, their question is, well, my children, though, I don't know if I want to move them, et cetera, et cetera. There's a lot of things you can still do, in this time frame to get.
Absolutely. And going back to new construction, towards the end of the year, the builders start amping up the incentives that they offer because they're wanting to get completed homes off the books for year end. So you can typically get a better deal, per se, on a new home late or, last quarter of the year. There's a lot of really good opportunity. And with the homes that are on the ground now, there are perhaps fewer buyers in the market, so you're not competing perhaps as heavily for those homes as you would in maybe March, April, May, or June.
I would agree. And as we mentioned also, rates are an all-time low again right now, so it's perfect time to get out there and to look at something like that.
Yes. I had a question too, Nicole. What advice do you give to some sellers that are, especially in that Woodlands area, that they want to put their house on the market, but they're afraid to get out there because they're going, I have nowhere to go and I don't want to go to the in-laws. Do you advise them that now's the time, or what is your suggestion?
I do definitely advise them that now is the time. As inventory continues to drop out and settle, prices are only going to still continue to inflate. I don't really foresee a decline in the price anytime soon. So it's just going to get more expensive. The cost of living is going to continue to go up. They can get top dollar for their house now. And I work with several property management companies that will help do month-to-month or short-term leases for clients that need those resources available.
Yeah,
That's
well,
good
you know,
advice.
there's those people out there that say, you know what, I want to get another 10% for my house, so I'm going to wait. But the house they're going to buy is also going to go up 10%.
Right.
And so
Exactly,
they're going to be losing money.
And that's critical. They know that. And their insurance is going to go up.
Yeah.
Well, you know, and one of the things is it's like anything,
Their
though,
insurance
right?
is going to go up.
Is, you know, if you're looking to improve in life, if we're always looking at improving and moving up, there's a cost to do so. You know, I've never heard anybody say, I moved up and saved $200,000. I'm being realistic about the situation.
I simplified
right?
my
Yeah.
life to say $200,000.
Yeah, I
Husband might be
simplified
one
it,
of
yes.
those people.
But, you know, in order to continue to progress, you have to realize also there is a cost associated with doing so, right? And again, it's all about lifestyle. It's where you want to be,
Yes.
what you want to do. As long as your budget is correct, as long as you can afford to move up, you know, there's still a lot of opportunities out there, and there's still a lot of good, effective ways to do it.
And the interest rates, again, I don't know how long they're going to stay down. Some of the economists I've talked to recently think it's going to be a point higher next year at the same
Wow.
time.
You know, we were saying it was going to be a point higher as of right now,
Yeah.
and it's
Yeah.
still not.
Yeah.
You know what? You get 10 economists in a room, you're going to get 10 opinions.
That is
Right.
correct. That is correct.
Maybe 11.
Yeah, you get enough agents in the room, you're going to get enough agents, different opinions.
Yeah, but I'm the one that's
Yes.
always right.
But that is correct. But Rob's always right. I forgot about that.
He's
so.
the godfather.
Yeah, the Godfather of real estate. You know, time flies when you are having fun. I tell
Yes.
everybody is we're coming up against the end of the show here pretty soon. Want to thank everybody we have. Lee, thank you very much for being on
Thank
board
you.
with us today.
Appreciate
Thank
it.
you, Lee.
Natasha,
Thank you.
OneGuard, thank you very much
Yes,
as well.
Thank you for having us at OneGuard. And if you need a home warranty, you can contact me or one of our wonderful reps. My number is 281-250-6862.
And they are wonderful, by the way. I use
our
them.
two-timer,
and
Nicole.
she's our two-timer on the show today.
Woohoo!
Nicole, how can we reach you one more time?
Again, www.dougarty.com. You can reach me 832-549-5868 or on my email, NicoleGetsItSold@gmail.com.
And then, I
Love
always
it.
like to leave everybody with the following saying, whether you can or you can't, you're right. Until next week, we're out.
All right.
And you've been listening to the Real Estate Rat Pack. The question is, who's Frank, who's Sammy, who's Dean, and who's the other guy?
Chris is
I'm
Chris
Frank.
is Frank.
I'm
He's
Dean.
Dean, and I'm Sammy.
Yes. That's right. Yeah.
So tune in to the really big show every Saturday at 9 a.m. right here on 100.7 The Word, KKHT.